Hello everyone, thanks for tuning into this video. Today we're going to be going over an interesting topic, which is Ethereum going deflationary. Now if you know what inflation is, like the US money supply, where it's forever increasing and increasing, goes from 5 trillion to 10 trillion and so on, deflation means the actual money supply will decrease. So what's going to happen to Ethereum? Will it go up? Will it go down? We'll find out in this video. Make sure to stay tuned. Okay, let's get into it. So let's understand. There has been a net reduction of 70% in Ethereum issued since EIP 115 went live. That equates to nearly 2 million in ETH burnt. Actually burnt from the market. And in June, the merge will reduce ETH issuance by another 90% and ETH will go deflationary. This will be the most bullish catalyst for Ethereum. Now, understanding this, in June, the merge will reduce ETH issuance by another 90%. Now, coming over here, this graph is on ultrasound.money. Now, this is actually, it actually tracks Ethereum to understand what is happening. How much is burnt? So, ETH burnt here, 1.6 million. In issuance, 1.5 million. How much ETH is actually being burnt? Where's it being burnt? OpenSea, Uniswap, MetaMask. We come down here and we actually see this chart. We can actually understand that ETH is becoming inflationary, and right here there's a supply peak. So if you understand when they spoke in June, which is this London period here, as soon as we get to this period here, we can see in accounts there's 82 million Ethereum, and as we go across, it's going down 79, 78, 77, 72 million, which means Ethereum is actually going to be becoming deflationary. And in economics, deflationary, which means if there's less supply on the market right now, it means that the price is going to increase. If the demand stays the same and the supply reduces, the price is going to increase because there's going to be the same amount of buyers on the market and there's going to be less Ethereum there to buy. And supply and demand, simple economics, it's going to force the price up. And that's where we need to watch out here. Coming back to some technical analysis quickly, what I thought initially was we were going to do a really quick sweep of these lows. Now, is that still going to happen? Because before June comes in, which is in this area in here, is that gonna be the skyrocket period where we've made a higher low, we've made a low, we've made a higher low, and then we continue up? It is very likely, and that's why I'm watching this technical analysis. These two bars are extremely important. If this finishes with another measured move bar, then I'll be able to have a measured move up. We'll be able to bring it up. Already we've got a target close to 4,000. Comes back into this triangle area, which is very common to retest for about 75%. So it's very common, and we need to be aware of what's going to happen, and we need to take in as much data as we can. And actually understanding here the proof of work removal. So once that gets removed from the market, it's actually going to go down and down. And what happens is proof of stake will start to actually take over, which rather than proof of work, which actually is the mining, doing the work on the blockchain, running the transaction, it's actually proof of stake. So actually staking your Ethereum to prove. Let's move on. In another tweet, only a couple more months until Ethereum has a triple halvening and becomes deflationary. While all people staking ETH will be earning 10 to 15% back, and ETH stake won't be unlocked 6 months after the merge. This is going to be the biggest for Ethereum. It's actually huge. So what he's actually saying here is people are currently staking their Ethereum and they'll be able to get 10 to 15% interest. So if you guys don't know and you go to your bank account right now, they'll probably be offering you somewhere between 0.1 and 1% interest, which is absolutely disgusting. You're earning 1% interest. You have $100,000, you're only earning $1,000 a year, whereas those banks are then offering that 10 times off. They're offering that $100,000 for over $1 million and loans. It's absolutely crazy. So we need to be on top of this, and we need to be, if you're not staking already, what I'm going to be looking is if we do have here, we need to get in and start staking. And if we do come to test this area down here, we really need to actually add to our staking period here. Moving on. So here we have Bitcoin. Bitcoin right now is 42,500. A little bit difference in price because it's a couple of days ago. Market cap $806 billion with the maximum supply of 21 million. That means there's no inflation. Inflation again meaning that you could increase the supply from 21 to 22 at any time, 23, 25. That means there's no inflation. It's hard capped at 21 million, and once 21 million is created, there is no more. With Ethereum right now, the price is $3,000, market cap is 360 billion, but is there a maximum supply? No, because it's deflationary. Deflationary meaning that the supply is forever going to be decreasing. And if we've spoken, if the price remains the same at 3,000, and there's 100,000 people that want to buy Ethereum at $3,000, and all of a sudden, and there's also 100,000 coins, perfect. But all of a sudden, if that goes down to 90,000 coins, and it's still sitting at 3,000, but there's 100,000 still people wanting to buy, then the price is going to increase because those people are going to have to pay a higher. After the first 90,000 have bought, they're not going to want to sell it back to the same price. They're going to say, all right, you can have mine, but for a 10 or 15% premium. The first one buys it for a 10 to 15% premium, and then that's how the price forever increases. Again, with Binance Chain, BNB, the market cap right now is 66 billion, so there could be some potential here. Max supply is 200 million coins, and again, it is deflationary. They have everything in place to decrease the supply over time. So let's get started by talking about Ethereum becoming deflationary. On this great article, we're actually going to have a quick read here. So with EIP 1559, which Ethereum is going to go into, users start paying a variable base fee for transactions. Instead of being paid to miners, it is burnt. Read the destroyed forever. In addition to being an optimal miner tip, this is far from being changed and implemented by this EIP. So let's get into exactly what that means. EIP 1559 allows for blocks to vary in size up to double the size that they were before, so that reduces the network strain that Ethereum currently has, and it was spiking gas fees up astronomically because there's just not enough network to carry. So previously the gas price was determined by using automated guesswork based on the network strain, but now it is instead determined by the blockchain itself on the base gas price, meaning that transactions are less likely to get stuck and everyone needs to pay the same amount unless they want to tip a miner for an extra fast transaction. In the future, Ethereum developers plan to do away with mining altogether and transition the blockchain to a much more energy efficient proof of stake algorithm that consumes a fraction of the energy in mining and does not require specialized hardware. Okay, and just finishing off with what I've been trading throughout this week. So I've been noticing for the last while here, we've actually been in a triangle, symmetrical triangle, bouncing up, bouncing down. We've been coiling. Price has been continuously coiling, and what that means is when we coil, once we get to this point, we're about to explode up or down. So that's what I was waiting for. As you can see, we ended up breaking out on this triangle, which is fantastic. We had a nice one-to-one measured move there. Copy. If you have my course and have been following my videos, you know exactly what I'm talking about. And look at that, we actually hit our one-to-one exactly today. So as you can see, we got a really strong breakout. Then nice consolidation, and then we just perfectly tipped. We touched this, and then we got strength, and we got even more strength. That's where my conviction was, and where I started to think this one-to-one actually had a good amount of conviction. So the entry point for the one-to-one was just above here. That's the entry point. Stop loss was down here. Exit was right there, and as you can see, it's just in the last bar, which is a 4-hour bar right now. As you can see up here, we just exited. So that's been an absolutely fantastic trade. Since we did hit this EMA, usually what happens is it's a 50-50% breakout with the triangle. So it's 50% up and 50% down, but it's also a 50-50 with the first break. So it's a little bit confusing here. So it's 50% up, 50% down, but also the first break has a 50% chance of being fake out. So it could be, it's still again a 50% up or 50% down chance here. What I'm looking here is if we get a strong rejection and we start to break this low and come back to this apex, I'll be really watching what we do here, because it's still again 50-50 that we break down or up even after this has happened, because we do have a lot of fake outs in a triangle and we just get this small little 1, 2, 3 push. So as you can actually see here, again, what I'll be trading this coming week is I'll be trading this 3 push, looks like a wedge. And look at that, it looks exactly like a wedge. If you guys know, have got my course and have followed my content along, you know that a wedge is a bearish when it's pointing upwards after we've had a strong bear, a strong bullish case. This is usually a case for it to come down and just have a little bit. I'm not saying we're not in a bullish case, but usually what happens is we get a 1 leg, 2 leg down. So maybe we'll recome and test this area here, but it's very likely that after this week coming into, today's the 25th of March, coming into the 30th of March, which will definitely be before my next video. I've been pumping out a lot more content now. You'll be noticing I'm putting up a lot of YouTube shorts, putting out all my TikTok content, bringing it over YouTube. And I'm going to be putting out at least 5 videos of YouTube unshort related every single week. So we're going to try and do one every single day of the week. And so as you guys know here, if you follow my course, know my content, this is definitely short for me. This is so that's how I'm going to be playing the next week. That's where I'll be scrolling into the 30-minute chart, actually seeing what's going on. Coming in here, you can see we had a bit of a triangle in here. Usually we get a one break, could be a fake out now, so got to watch that pretty heavily. But this is what I'm watching. Then all day I'll have the 4 hour on, have the 30-minute and the 5-minute. 5 minutes is for timing my entries, 30-minute is to actually find my entries, and 4 hours to actually watch what the hell is going on the longer term time frame and be able to scroll out and be able to say, oh, 1, 2, 3 push, yeah, bit of a triangle. Oh, now we're coming up for a wedge. Oops, I can already see this wedge on the 4 hour, and that's how I notice it. See that 4 hour come into the 30. So if you've enjoyed this video, make sure to like, subscribe, and to leave a comment. I'm going to be making more videos, and make sure you understand what's going on with Ethereum and why it's going deflationary. Thanks for watching.